Matrix FX. Today's video is about the explanation of the dashboard I showed in my previous video. I'll tag this video with that kind of video, so if you haven't watched it, you can go and watch that video. Okay, it's about explaining what it means about the market executions, and also how to use the lot size, take profit, and the stop loss. Okay, so I'm going to explain all in this one video, and I would love to explain other more part of the trading system. Okay, and it's my pleasure to be here and to be helping you guys so that you can at least be a millionaire one day. So this is the MetaTrader 5. Okay, this is just when you go to quotes, you find all the currencies that I told you guys that you can trade on. Okay, so let me pick gold. Okay, let me open gold, and okay, let me pick euro versus US dollar. Okay, so that you guys can understand right now. Okay, so this is how the chart looks like. Okay, you can see the prices moves up and down, up and down, up and down. This up and down, people are making money out of it. Okay, so what I'm about to teach you here is the first thing to be able to understand. We all know that when you go to the market, okay, we always want to buy. If it's a shoe, you want to buy a shoe, you want to buy it at a low price. Okay, so that tomorrow or someday, that shoe, when you are selling it, you can make profit. Okay, or let's say you want to buy a car, and the car is 1,000 Ghana cedis. Okay, for instance, the car is 1,000 Ghana cedis. Let's say that's the market price. Okay, so we can also say that the market price, okay, let's compare it, or let's assume as this green bar which is going up and down here is the market price for a car. Okay, so that is around 1.07177. okay, let's assume that is the price of a car. So let's say per where the market is, okay, I will predict a buy. Okay, because based on my technical analysis that I've just watched right now, it will rise again. Okay, it's an uptrend, it's going up. So I'll say okay, then I'll buy around this price, which is 1.0717. okay, so immediately I buy it at this price. I'm trying to tell the market that I am buying that price as a cheap price. Okay, because when you are buying something, you want it at a cheap price. Okay, so I'm trying to tell the market that when I buy, okay, let me execute it so that you guys can understand. So when I click on buy, let me clear this thing. Okay, when I click on buy, okay, that means, as you can see, I bought it at let me make it more. That means I bought it at this price. Okay, the first price showing here is the buying price. Okay, that means I bought that car at that price. It's an assumption that I'm making. Okay, so if I bought it around that price, meaning that I'm trying to tell the market that I am buying at a cheap price. So here's the case. If the market moves up, okay, right now you can see that the market is moving up to, it's above my price that I bought, meaning that the market is buying it at a high price. Okay, compare the two prices. This is mine. Sorry, so this is my price, okay, and the red one is the market price. Right now the market price is rising up, but I bought it when the market was low. So meaning that if I am to sell that price right now, I'll be selling at the market price right now. Okay, don't get confused. We buy at a low price. Okay, so once, it's like you are challenging the market. So once you buy at that low price and the market moves up, okay, the market price moves up, it means you are making profit because you didn't buy it at that expensive price that the market is showing right now. Okay, you didn't buy it at this price. Okay, you bought it at this lower price. So right now that the market is going up, okay, it means you are making profit. The market is not making profit because you bought that car at this small price, and now the market is moving up. It means that you have at least made a profit. Right now the market is buying it at a high price. You are making a profit, because when we compare your buying price to the market buying price, your price is lower than the market price right now, because when you are buying anything, you always want to buy it at a low price. So when you are able to buy it at a low price, that means you are making profit. Okay, and that's how the buy means. Okay, when you buy something, any currency pair on a particular trade, it means that you are expecting the market to move up. So whenever you click on buy, you are expecting the market to move up. So there's you see the scenario here. You see that the green price shows where I bought my market. Okay, so you can see the green price. I bought it around here. Okay, that is my price, so I bought it around there. So my expectation is for the market to rise up, and as you can see, the market is now rising up. So it means that I am making profit. And how do we calculate this profit? We will get there. For now, let me explain these ones for you guys. So you saw that I quickly made my analysis. I saw the chart and I knew this was an uptrend and it's moving up, as I said. So if it were to be real money, okay, I'll be making this profit right now. But someone will say, but this profit is very small. Yes, it is small because of the lot size, and I'll come on that. I'll explain what lot size means. But right now we are focusing on the buy and the sell, what all means. Okay, so let's say, so I hope you guys understand the buy right now. So anytime you predict buy on a market, okay, you are expecting the market to rise. Okay, your next wishes is for the market to rise. If the market doesn't rise and it drops down below where you bought your price, that will be a loss, because it will mean that you bought it at a high price and the market is buying at a low price. It shouldn't be like that, because we always want to buy at a low price, not a high price. Okay, when you buy at a low price, you always want to, or you always wish the market should also buy at a high price, because when you buy low and the market is buying at high, that makes you your profit. So it is just vice versa. Okay, it's the same thing when you go to sell. When you click on sell, let's assume when I click on sell right now, where the market is right now, I am wishing that the market should drop, because we always sell our prices high. Okay, when you have a car, you always want to sell it at a high price than the market price. Okay, so once you click on sell, it means that you are praying that the market should drop. Okay, the market should drop below the price that you sold, so that it will mean that your price is higher than the market. Okay, and that will make profit. But if it turns out that you go to sell at a particular price and the market is rising, it means that the market is selling at a higher price than your own, and that will make you a loss. Okay, so we always buy low and sell high. That is when we want to make profits. You must make sure your prediction will be buying low and also selling high. Okay, so that's about buying and selling. Now let's come to the dashboard. And as I showed you in my previous video, whenever you want to execute a market, you just click here. Okay, then you click on buy or sell. But here are the few things that I want to explain. So you guys saw that I bought I bought €1. I used my €1 to buy US dollar at this price. Okay, I used €1 to buy US dollar at this price. Okay, so that price is US dollar. It means when I'm having €1, I'll be getting that price in US dollars. And once I'm buying, I should make sure that my prediction is buying at a low price. Okay, so that I can make profit. So someone might say, oh, then your buying is giving you a smaller amount here. Yes, that is why I said it all depends on the pip size or the lot size. Okay, that's the lot size that I choose to buy. Let's say I have, right now you can see that I have about 292. Okay, but then I used a lot size of 0.01. What does that mean? So if you are new to my WhatsApp group, anytime you join, I will always send you the PDF to read about those basic terms and how they operate. So in the PDF, you saw what a lot size is and the value of a lot. Okay, how it's being calculated is very simple. This so let me go and explain the lot size over here. Let me go and explain the lot size over here. Okay, so the lot size is actually the amount you want to risk per pip. You all know what a pip is. I'm sure by now you all know. It's just the point difference between the market. Okay, you read it in the PDF. It's very simple to be explained over there. So when I say a pip, I mean this kind of point that is moving on the fourth decimal point. They are the ones they call pips. Okay, this is a fractional pip. Mostly we don't add it to as a profit to the counting. We always count from the fourth pip. Okay, from the fourth decimal point. That is called a pip. So from the first decimal point, it's called 1 pip. Okay, it doesn't mean because they've written 1 So this is how it is. In mathematics we have ones, tens, hundreds, thousands. Okay, it's the same thing here. So a movement here is ones, a movement here is tens, a movement here, sorry, let me do it well, a movement here is hundreds, a movement here is thousands. So a movement here is 10,000. Okay, so it's like tens, hundreds, thousands, 10,000, just like that. So if right now the pip of this particular price, okay, let's say the pip moves right now, this is the amount, the market price 1.0722. okay, so when it moves to 1.0723, that is 1 pip. Okay, the fourth decimal point change to 1 pip as it's showing right now. Okay, as it's showing right now. If it moves from 1.0730, okay, all you have to do is deduct the last price from the initial price. Okay, so that will be, you deduct this particular one, okay, from this, and that will give you the amount of pips. That will be like 0.00 how much is that? That's about 8. Okay, that's the difference is 8. You just find the difference, and that will be the amount you had. That will be 8 pips. Okay, if it's supposed to be 1.0732, sorry, if it's supposed to be 1.032, you see that it's an additional 0.007, sorry, it's an additional 10 pip. Okay, 10 pip has been added to this one over here. That's why we are getting this particular amount, decimal point here. So mostly the fourth decimal point is 1 pip. Okay, the second is on the 10th pip, the third decimal point is on the, so it just read from the back, from the right to the left. Okay, that's how pips oh, I made a mistake. Okay, that's how pip. So this one, if it were to be real money, boom, we are making profits just like that. Okay, so I'm just explaining things here, okay, so that you guys can understand. So that is what a pip means. If you read the PDF, you understand. Now, after you've understood the pip, what a pip is, now we are focusing on the first let's move to the second one. Okay, the first one I'll explain it. This particular numbers you see here is just a simple thing that is called lot size. Okay, so if you read about lot size, you know what I mean. In the PDF, it's very simple. So here is where you set your lot size. Okay, this particular place. Okay, this one is an addition. Okay, this is subtraction. So when you click plus 0.1, it will just add 0.1. okay, if you click minus 0.1, it will deduct minus 0.1. You can set it yourself manually. Now in the book it says, or in the PDF it says 0.01. okay, it's a micro lot. It's a micro lot size. Okay, it means that this particular one, this 0.01 in currency is how much? That means this 0.01 is equal to 0.1 cent. Okay, that means 10 cents. Okay, in dollars it's 10 cents. And when you have when you change it to 0.02, it's 20 cents. When you change it to 0.03, it's 30 cents. So in my trade over here, you see that I used 0.01 cent lot size, that is 10 cents, to make that trade. That means each one pip will give me 10 cents, whether I'm losing or gaining. When I'm losing, it will deduct 10 cents from my currency, okay, from my balance. When I'm winning, it will add 10 cents to my balance. Okay, so when we equate this right now to the current money that we are having now, that means I'm having, that's 60 cents over here. Okay, so here's where we do the math. This means that to be able to get 60 cents, how do you calculate if you are getting 60 cents? So it's just simple. We all know we used 10 cents to get that 60 cents. So how to calculate the pip? You ask yourself, so how many pips has it moved, okay, that we are getting 60 cents? So that's about 6, right? Because when you multiply, let's go back home, open calculator. So when you multiply 0.10 cents, okay, times 6 is giving you 0.6 cents. Okay, that's what has happened here. So it has moved 6 pips. Or you can check the pip size by deducting this from this. Okay, sorry, deducting the first one from deducting this one from this. Okay, and that will give you the 6 pips movement. So it means that the 10 cents is now giving us 60 cents. We raised 10 cents and now we are getting 60 cents. So assuming I did it, assuming I did here 0.1. Okay, so let me go ahead and explain that in the chat. Okay, so when you change here the volume, that's the lot size. When you change it to 0.10, 0.10 is simply means $1. Okay, 0.10 lot size means $1. So the calculation is very simple. Why it is $1? Just check in the PDF in the WhatsApp group, okay, and you understand it. So to make it simple, I always say to my beginners that 0.01 means 10 cents, 0.1 means $1, then one lot size, okay, one lot size is $10, meaning that every pip will cost that amount, that $10. When the pip moves one, whether you are gaining or losing, it will just, when you are gaining, it will give you $10. Okay, let's say that right now the market price is 1.0721. okay, when it moves to 1.0722, it means you've made a profit of 1 pip, and that one pip will give you $10 because you set it here that 1 pip should give you this lot size, and this lot size means $10. Okay, so that's how the lot size is being measured. Okay, one lot size means $10. If you bring 10 lot size here, okay, we know that 1 is equal to 10, so 10 will be times 10, that is 100. So if you bring 10 lot size here, it means one pip will give you $100. And to trade in very huge amounts like this, that means your account should be very huge. Okay, your account balance should be very huge before you can make such a big lot size. So I always tell my beginners who have lower accounts, okay, who don't have huge amounts in their account, to always trade in smaller lot size. Okay, if you have like $100 in your if you have like $100 in your account, okay, if you have $100, I always recommend you should trade in $1 lot size. Okay, that is 0.1 lot size, so that you don't lose, especially when you make a bad choice, then you are losing. You don't lose all your account. If you are having $10, okay, in your account, I prefer you use the 10-cent lot size, that is 0.01 lot size. Okay, so that at least, even if you trade the whole day, if you are a trader using only $10 to trade, okay, the whole day, you will at least make times 2 of your money in your account. Okay, so please just be careful when you don't have a huge amount in your account. If you want to place in bigger lot size, then your account too should be bigger. Okay, you shouldn't risk your amount that you've invested into it. Okay, so now that's about lot size. Okay, and now you can see that we have something called SL and TP over here. The SL, okay, the SL means stop loss, okay, and TP means take profit. So you can just like my trade over here, okay, I can set my trade that I opened over here. I can set a stop loss. The stop loss actually means that, you see, when you are trading, you might not know what is going on, especially when you are not online checking up on your trade. Okay, so if you know you won't be active checking up on your trade, you must set a stop loss, and the stop loss always help. Okay, that is whenever you are making losses, when the market reaches at a point that is making losses, it will just stop at that particular price that you placed. Okay, so right now this is my position that I open. Okay, so when you slide to the right, to the left, you find these symbols there. Then you go to the pen symbol. Okay, the pen symbol. When you click on the pen symbol, then I can set my stop loss. Okay, or take profit. Take profit means when the market reaches at a certain height, or at a certain profit, it should stop. It will stop at that point. So how do we do that? Okay, you can go back and go and view your charts. Okay, so you know that we bought our price here and now we are making profit. Okay, so if I want to place a stop loss, maybe because I don't want to make a huge loss, I can say, okay, when the market comes down below my prediction price around here, okay, it should, let me draw a horizontal line. So I can predict that when the market reaches around this line, that's where I'm making losses. Okay, it shouldn't pass this line. Once it reaches that line, it will just stop. Okay, so let's say, let me show you how to do it. That's, you just tap on the screen, this thing will show up. Okay, then you choose this symbol is for shapes. Okay, then you choose the horizontal line. So I can say, okay, when the market reaches here, down here, that should be my stop loss. It will just stop the market. Okay, to stop how far you are losing. Okay, so if it reaches here, it will just stop the loss. Okay, because when it reaches down below where my buying price is, it means I'm making loss. And to stop that, I have to set a point whereby it can stop the amount of losses that it's making. Okay, so to copy this particular price, okay, that's 1.07170. You just have to go to stop loss, or you click on it, you hold on it. Okay, you click on that line and hold, then you click on the pen. Okay, then you come here, you copy this figure. Okay, when you are done, just click back and go to trade and slide it. My network, is misbehaving. Okay, so once you hold on it on the outline, then you click the pen symbol at the top, then you copy this number over here. Okay, then you go back, then you go to trade. Okay, then you click on the pen, then you paste it at where the stop loss should be. So around this price, when the market reaches there, that you are making losses. When it reaches there, to stop the market, it will stop your trade. Okay, so the next thing is to click modify, then it will be placed. Now we've set our stop loss. Okay, so when you click on it, you see that our SL is here, 1.07170. so that's how we set the stop loss. It's the same thing to the take profit. If I want to take profit right now, I'll say, okay, I bought it around here. Okay, I bought the market around here. Okay, and now it's shooting up, meaning I'm making profit. But where do I want to make my profit, take my profit, especially when I'm not on the trading platform? Okay, because it can move up at a certain point that you might not be aware of. Okay, so I'll say, okay, let me take my profits around here. Okay, so for doing that, it means when the market lines, okay, that red and green lines, mostly it's the green line, when the green line reaches that point, it will take your profit from there. Okay, that is when you are not monitoring your trade, it will just take your profit from there. So how do we do that? You just have to do the same thing. You click on the screen. Okay, sorry, you click on the screen, you click on shapes, then you take a horizontal line, you draw your line. Okay, you draw your line, you click and hold on it, then you click the pen symbol you copy this particular number because that will be your take profit. Now you go back to trade, you slide this to your left, click on the pen, and you paste it at TP. Okay, that's your take profit. Then you click on modify. So this means that, let me delete this horizontal lines. So this means that the TP means that take profit. Once the market hits there, okay, you can see that the market is very close. Okay, it's very close to the take profit. You see, it's just some small gap. Now it has taken my profit. Okay, so once that it has reached my take profit, you see that the market has executed. Okay, so when you go to trade, you won't find it there. But when you go to history, okay, you see that it took your profit. This is it. Okay, this is where it took your profit. So you see that you made a profit over here, which is showing here. Okay, you made a profit of 0.74. okay, because of the take profit that we set. So this one, you can set the take profit and get out of the trading platform, go and do your work or something else. By the time you come, the market will take profit. It only works if only the market reaches your take profit. Okay, mostly I prefer to monitor my trades, especially when I'm not doing anything and I'm trading. Okay, that's how I do my trade. I monitor them a lot. So as you can see, the trending is moving in parallel. Okay, the zigzag is moving in parallel. I will show you how to predict all those ones. I have a particular file to drop on that so that you use it as a reference. Okay, you use that as a reference. So it's moving in zigzag in parallel. Right now it will reach up here, it will stop dropping again. So this is just by the way. Okay, so the next thing I want to explain is I'm explaining only the important ones over here, the ones you'll be needing. I'll be explaining here. Okay, so when you click down there will be a drop down. So you can see instant execution, buy limit, sell limit, buy stop, sell stop. Okay, buy stop limit, sell stop limit. I will explain each and every of them. Okay, I'll explain them one by one, but not in this particular video. Okay, I'll drop another video on that because the explanation has to be very clear to you guys. Okay, I don't want to add everything together to this video so that you get confused. So instant execution, we all know that's the normal one. You see the price, then you click on buy or sell. It will buy at exactly where the market is. That's the instant execution. Okay, it buys at the events where the market has reached, or it sells exactly where the market has reached. Okay, so that's for the instant execution. But in my next videos, I'll explain what it means: buy limit, sell limit, buy stop. All these I'll explain them one by one so that you will be able to understand and also use them when it's very needed. Okay, so that's how in this video I've explained how a lot size is. Okay, how to set a stop loss and take profits, and how it all went. Okay, so this particular trade right now is in downtrend. So let's say when I change my lot size to 1.01, that means one pip will give me $1. Okay, when I go sell, okay, so you see that 1 pip change, okay, 1 pip, the difference between these numbers, 1 pip will give me $1, okay, it will give me $1. 1 pip in this particular thing will give me $1. Right now the market hasn't changed to 1 pip yet, okay, so it's not giving me $1. So you can see that I went sell around this price, okay, so meaning that when the last 4 digits decimal point, that's the 3, moves to 4, I will be getting $1 here. Oh sorry, moves to 2, okay, when it drops down it means that I'm making profit. I will get $1 over there. As I said, when you click sell, you are expecting this market price to drop, okay. When you click on buy, you are expecting the market price to rise. So now, as you can see, it's showing that I'm making losses, but see, that's not it. In one key tip I'll give to you guys is, in trading you must be very disciplined on something called patience. You must be very patient. If you are not patient, you might lose a huge opportunity or a profit, okay. Someone may place a trade like this. As soon as the person sees that he's making this small loss, then they will panic, then they will just close the market. That's why before you place a trade, you must know that this market price will definitely do this or it will do that, okay. Right now I'm making a loss of $1, okay, but you don't have to panic, because if you believe in your strategy and if you believe in what you've seen ahead, okay, you will see that this market will definitely fall, okay. This market will definitely fall. But we have some traders, they are not patient and they are scared, so once they see they are losing, they'll go and execute, they'll go and stop over there. So if you don't want to be that type, just set your stop loss and set your take profit, so that one, you know that when it reaches that stop loss, the market will stop for you, okay. So, and there also, if you are monitoring, that's where you must have patience, because this market, I am saying it will go down, meaning I'm selling it at that high price, meaning it will drop. So right now you see it becomes blue, it will come red, it will come blue. It's because of the fluctuations of the market, okay. But definitely this thing will drop down, okay. That's based on my experience and what I'm seeing, it will drop down. So please, that's the tip. When you are trading, you shouldn't panic, especially when you are making a loss right after you placed an order. You must be patient. Somebody can place this and leave it for about a month. That's for the swing traders. They can leave it for a long period of time because they've already set their stop loss and take profit, and they have a target. That's why they don't panic and go and close it when the market is losing, okay. My network isn't responding, okay. So guys, today's video, as I said, try and understand everything. If you have any other question, I'll leave my WhatsApp group link down below. There you can join and also ask me questions over there. It's very simple as that. So in my next video, I will be explaining what these things are, how to use them. We already know instant execution, but it's left with the rest to be explained, and I'll drop a video on that. Thank you.